Many people assume that the world's best investors possess superior intelligence or genius-level IQs, but that's not necessarily true. Their true advantage lies not in raw intellect, but in the distinctive ways they think and process information about the markets. These top investors approach the market with distinct mental frameworks and decision-making processes that truly set them apart from the crowd. This unique approach consistently leads to extraordinary long-term results that others can only dream of. One of the most fundamental differences in their mindset is how they completely redefine what risk really means. For them, risk is not about short-term market volatility or price swings, but specifically the permanent loss of capital that cannot be recovered. They have a deep understanding that market fluctuations, even severe ones, are often just temporary noise that will eventually smooth out. In contrast, a true loss of capital means that the money is gone forever, with no chance of recovery. This powerful perspective fundamentally shifts their entire focus away from reacting to short-term price swings and instead toward evaluating the underlying intrinsic value and the long-term viability and sustainability of an investment. Another critical aspect of their superior thinking is their incredibly extended time horizon for decision-making. They patiently think and plan in terms of decades, rather than obsessing over short quarters or even years. This remarkable patience empowers them to confidently ride out all sorts of market cycles, downturns, and booms alike. Over these extended periods, they fully benefit from the magic of compounding returns that build wealth steadily. They remain completely unswayed by fleeting immediate trends, hype, or even noisy quarterly earnings reports. Instead, their decisions are guided solely by the enduring potential and fundamental strength of their chosen assets over time. A third key principle in their arsenal is prioritizing the avoidance of fragility above all else. This means they focus far more on avoiding obvious stupidity and pitfalls rather than desperately seeking moments of brilliance. In practice, they meticulously focus on robust, high-quality businesses that boast strong balance sheets, durable competitive advantages, or moats, ensuring they can withstand various economic shocks and uncertainties. This inherently conservative and prudent approach effectively minimizes the potential for devastating downside risk. It guarantees their survival through tough times and allows continued participation and growth in the market. The best investors also actively hunt for asymmetric outcomes in their investments. These are prime situations where the downside is strictly capped and limited, while the upside potential remains virtually uncapped and boundless. They diligently look for those rare opportunities where any potential loss is clearly limited and predefined, but the potential for gain stretches out limitlessly into the future without boundaries. This smart strategic positioning enables them to capture significant, outsized returns over time. At the same time, it robustly protects their capital from any possibility of catastrophic, ruinous losses. Finally, these exceptional investors always think in terms of interconnected systems, rather than just knee-jerk reacting to isolated events or headlines as they come. They grasp that financial markets function as complex adaptive systems, where countless factors constantly interact in highly unpredictable and emergent ways that defy simple analysis. Rather than impulsively reacting to every sensational news headline or daily drama, they thoughtfully consider how each event fits into much broader economic cycles and evolving social trends. This comprehensive, holistic view equips them to better anticipate key future developments and trends. As a result, they consistently make far more informed and effective investment decisions. These distinct mental frameworks, redefining risk as permanent loss, embracing ultra-long time horizons, avoiding fragility at all costs, seeking asymmetric bets, and thinking holistically in systems, form their invisible, powerful advantage. Importantly, these are not some hidden secrets locked away, but rather disciplined habits of mind and consistent practices. When applied diligently over time, they inevitably lead to extraordinary long-term results. By consciously adopting and internalizing these proven ways of thinking, any aspiring investor can start to unlock their own latent potential for lasting success in the dynamic financial world.